A very good morning to all of you and a warm welcome once again. My colleague Abha Bakaya has welcomed you, and I have the tough job of getting 4 corporate veterans, people who understand business, boardrooms, and all manners of battle for market share and beyond on the stage here with us. And here in the audience also a galaxy of luminaries. Very, very delighted to be talking to this panel. And the subject for today, the winning formula and staying ahead of the curve. TV, I'm going to start with you. How does the curve look like? You know, let's for a moment pause on winning. In the current volatile and uncertain times, my colleague Saurav described that. What is the curve looking like to you?
You know, I think we'll all have to get used to the fact that the curve will keep changing all the time. And I think how do we respond to that is, to me, going to be very important in success, right? Because we are a very interconnected world, and geopolitical events have a greater impact than we had thought in the past. Even when when COVID started, we thought it was a local event in China. When the Russia-Ukraine war started, we said it was a problem for Europe. So I think we need to get used to that, and organizations need to be able to adapt to a curve which keeps changing its slope very rapidly and very frequently.
Amish, I'm going to jump to you and not follow the sequence here. How difficult or uncertain is the environment for doing business looking for companies, not just in India, but perhaps globally as well?
So I would say, I think first of all, you know, the expectations of people after the pandemic was we will see recovery, and, you know, we're going to see some good times coming back. And you know, we're very hopeful given a event that we had near Black Swan. But when the geopolitical events hit us, I think things have gone awry globally. You are seeing, you know, inflation really come up, and it is sticky. Structurally, I think there was an expectation it will be transitory. Maybe it is just went up demand and it will stabilize, but we are not seeing that. It is very broad-based. All global economies are struggling on inflation. And you have started seeing reactions from global central banks, which are tightening the liquidity and the financial conditions across the globe. Now, what it means is you will have impact on growth, which is already likely to happen. And emerging economies like India will have to react, you know, to the emerging global environment. So one is direct impact because of slowing growth globally. How does it impact our exports and our economy? Second is the entire financial condition, the monetary conditions, from an interest rate, from an exchange rate. So I think we are looking at a lot of uncertainties playing out, and India is not, you know, it is going to be impacted from the global scenario.
Padmaja, I'm coming to you now because you are a veteran banker, and I was waiting for some industrial views. The era of free money on a tap, seems to be over to some extent. At least that tap is looking like how taps are in the Indian summer in rural India, barely a trickle. Is that assessment fair?
I think, yeah, it was some time coming, maybe because of the COVID situation globally, and more so globally actually in the US. And in India also, across the economies, there has been a sort of a pumping liquidity into the system. As a banker, we have seen in the last 3 years that it was required, especially when you come to supporting the very needy sectors of the economy, this was required. And India, I think it was well calibrated. Now the situation is different. As already mentioned, the interest rates are to go up, otherwise the inflation is rearing its ugly head. And in the longer term, or at least in the medium term, I think, yes, the money will be costly. And that's good because both the corporates have been, I think the twin balance sheet problem, which we discussed earlier, which we were always discussing, I think that has now sort of come under control. The banks are doing well this quarter and last quarter. The balance sheets are healthy. The corporates have deleveraged. So I think there is a good sense of coming back to basics.
So, in a way, one quick follow-up with you before I go to Sanjeev. In a way, are we better prepared as a country, as our entire business ecosystem for this crisis, which has already started in the West for various reasons? Are we better prepared than we were, for example, in 2013-12 or 2008?
I think we are much more aware. We are much more globally connected. We are much more globally we have a seat at the real decision-making tables now, whether it is with central banks, whether it is with IMF, World Bank, wherever. I think we have a say in matters, so that makes a difference. Secondly, I think India is much better prepared compared to the 2000. I mean, that was mainly a financial crisis, both the crisis that you mentioned, and it was also the 2008, I think, came from the West. So that was more of a forex, more of a dollar, disturbing the exports and also some sectors of the economy. But this time, COVID has hit the entire economy. And we have put in, I think, measures not only in terms of capital infusion, in terms of balance sheet strength, but also risk management, technology, automation. So
that's a good point. We seem to be better prepared than previously. Sanjeev, I'm coming to you, and we are in a tough neighborhood, and this is not a question on India-Pakistan, which would be asked in a political panel. We are in a tough neighborhood where we now see that economies which are very essential to India's long-term geopolitical security as well, Sri Lanka, you've seen what's happening in Nepal, and Pakistan itself pretty much bankrupt. Given this sort of a situation and the other things that are happening, including a point that I want you to pick up and perhaps take it up on the panel. I know TV will want to contest that. I believe that a lot of the inflation that is coming in is by companies and producers making up for lost time for the business that they lost during the COVID lockdown.
Yeah, thanks, Siddharth. So I think the first thing to my mind, I think just on the inflation part, I know that we are talking about central banks across the globe, upping the interest rates and stuff like that, which is fine. I think we should do that. I do also believe that a lot of the inflation is actually supply driven. I mean, if you look at it, I'm not saying that we shouldn't be raising interest rates. I think that's obviously going to be the case. But I think it has to be a bit measured, because I think there's a supply side challenges that we have. I mean, supply chains have been disrupted, and that is why we are now talking about localized supply chains. We're talking about deglobalization and so on and so forth. So I do believe that a significant component of the inflation that we are experiencing today is supply driven. It could be manpower also. I mean, not just material, but also manpower. I think it's both. So I think that's the first part. I think the second part is, and since you mentioned about the neighborhood, I think one thing which I see more and more happening as the world becomes more and more deglobalized, and there could be lessons for us in India as well, and I think we're already on the path. I think I see emergence of local trading blocks. India is already on the path of a bunch of FTAs at this point in time. And I think that is something that I anticipate growing in times to come as the world, because of whatever. I mean, we have been seeing this forever. There has been, nationalist fervor or whatever. It's caused over the years also, even before pandemic hit us, it was there. I think it has got accentuated because of the COVID environment that we have had. And I think whether it is regional trading blocks, FTAs, we have done one already. We are very near to one with the UK, and there is talks with the European Union. I think these are ones which are going to help us come through this tough period in times to come. That is what I would say to the geopolitical question.
Okay, that's a good point. And we've, from this entire panel of 4 people, we've got a basic sort of lay of the land as to what is happening. TV, now I start with you. That point, which I restate here for the benefit of the audience and for you to also comment about, a lot of the inflation being passed through because companies are trying to make up for lost profits. But the question is, beyond the diagnosis of the problem, how are you yourself as a company, very large company, global footprint, what are you doing to stay ahead of the curve, and what can you share with our audience here?
Sure. So I think few things. Supply chains, anyone who's managed supply chains will tell you it's always complex to manage supply chains, and supply chains don't like disruptions, right? So to me, I think for the last maybe many decades, supply chains have been optimized around efficiency and cost and just in time and stuff like that. But now we are optimizing supply chains around resilience. So I think as organizations, we're trying to see how can you build resilient supply chains, because disruptions happen all the time and you cannot be vulnerable.
So is JIT changing? Has just-in-time changed to some other term that you would like?
Yeah, because just-in-time is great if everything works perfectly, right? But even during the pandemic, supply chains within India were disrupted. If you had a supplier in Maharashtra and you wanted something in Odisha, it couldn't reach you, right? So again, the point which Sanjeev made is important. I think there's greater, if you look globally, everyone's looking at China +1, right? Because they don't want to be vulnerable to one source, however cheap it is. Even within India, you're looking at how can I indigenize, how can I localize. Even within localization, can I have suppliers closer to where I am? I think the auto industry has done this very well for decades, right? So you have vendor parks, you do whatever. So I think organizations are seeing that the cost of business continuity is something which is very impactful, and we've been reminded of that over the last couple of years. So that's one thing. Second is technology. I think companies who embrace technology have been able to respond to this crisis much better, because technology, this crisis has basically accelerated you into the future. And companies who are better prepared for that by investing in technology have been able to demonstrate greater resilience and agility.
I'm interrupting you here. Do you see any evidence of not large organized sector players like you, but medium and small enterprises managing to catch up on technology? Because in other conversations that we have, I sense that there is a gap of resources, the amount of money, and their own capacity to absorb technology.
So yes, to some extent you're right, but I think the fact that India as a nation has invested significantly in technology, and there's a technology backbone which is being created, I think is great. Because if SMEs, there are many world-class SMEs in India, and they are also realizing that if you really want to be a world-class SME, you have to embrace technology, because you also then need to be plugged into global value chains. You need to be able to cater to the needs of global customers. So I think there is a greater understanding and appreciation that technology is an opportunity rather than a cost or a threat in some sense.
Padmaja, I'm coming to you. Since we spoke about money becoming costlier, the question is, how long will that be so? Because there are two aspects to money being costly. For large companies, for the rich, perhaps a marginal difference. If the balance sheet is bigger, then there is a very significant. But for small and medium companies who are actually employment drivers also in India and need all the support emerging out of the pandemic where they were very badly hit, you can take sectors upon sector, tourism, retail, hospitality, even one part of the real estate sector. How long will money continue to be costlier and perhaps with the tap not fully open?
I don't have a crystal ball, so I can't really say or comment on that. But I think it will be until inflation comes down to a level that RBI is comfortable with. And but meanwhile, I think whether it takes 1 year or more than that, I would think that the large corporates, as you mentioned, are already, I also said, deleveraged. So I think the cost of money to them is today manageable. And the other part, there is the corporate bond market, I think, needs to be much more active and much more vibrant. Coming from NSDL now, I can see that this side of the market is not as active as the loan market. That would sort of level the playing field. For medium and small enterprises, what you said is correct. There are, many schemes of the government which are subsidizing, which are giving the banks some sort of a backstop in terms of giving those loans. It was there till a few months back. Now it's sort of withdrawn. But with all that support, I think medium and small enterprises have been able to a large extent, ride this problem out there. Going forward, as you mentioned, technology will make a huge difference to these. And both the government and the state governments also, I have seen a lot of places where the MSMEs are being specially supported. And there's a network of MSMEs that is being created so that technology costs are saved. The API development, the rest of the technology stack that has to come for MSMEs. Even the ONDC that we talk of now, the government is coming up with a e-commerce platform for basically the small and medium. I think there are a lot of interventions. The only thing is everything should come together. This, together with reskilling, upskilling employees, should help MSMEs come over this. But it would be a rough ride. There's no doubt about that.
It will be a rough time, and I'm glad you said that. There are a lot of money matters that I want to discuss with you. I'll try and come back if we have time on that. Amish, I'm coming to you, and this is to do with a question that you perhaps can answer from your perch. How realistic is chasing 6% in India and an economy where growth is uneven and needs support? Forget headline catching numbers, forget those chimeras of 5 trillion, which is an exchange rate question more than anything else. We need to support growth for Bharat. Forget the top tier. Is 6% realistic? Is this a gauntlet that the government and the RBI have needlessly sort of put on themselves?
So our view is that we are seeing the next decade between 6.5% to 7%. So we
of
are
inflation?
Or no, of growth.
Of growth, okay.
Yeah, of growth. I think, and that is largely, sorry, you are asking for inflation?
No, go ahead, but because you've given a good headline, the MD of CRISIL is saying growth is likely to be 100, 150 basis points lesser than the most optimistic scenarios right now. But I'm not holding you on that headline. This is just a discussion.
No, so I think, given where we are and what is going to drive that growth is going to be investment. See, this is a country where we need to have investments, and the government infrastructure investment is going to be key enabler in driving that growth. Of course, we have a very good geographic dividend, consumption. India is a growth story from a demand and consumption. But I think infrastructure investment from government, infrastructure investment from the private capex, I think is going to be very critical to drive this growth.
So sorry to interrupt you. Why is, in your view, is private sector investment what it should have been right now? Because we always keep saying government should do more. And when we talk to government people, they say there isn't enough absorptive capacity. Kitne flyover banayenge, kitni sadke banayenge, chahiye kisko, who's paying for it? And you have protests on tolls, for example.
So I would say private sector capex has slowed down over the last 5 years. If you just look at the trend of private sector capex, it has been lower than what it used to be earlier. A couple of reasons for that. I think capacity utilizations within the private sector has been lower than what would trigger the need for capex. Uncertainty in the environment. I think also, if you look at just the growth in terms of the growth has been uneven over the last many years. But I think things are changing. And what is changing right now is if you look at government, there's a recognition they have come up with a PLI scheme, which is going to ask 2.5 lakh crore of investment over the next 3 years.
May I interrupt you again? Why has telecom PLI been extended by a year? Are people not able to deliver? Were the targets too over-optimistic?
So I don't want to pick up on any one sector.
Okay.
Let me talk a little more broader. I would say that, from a PLI, that's one big investment. Second is the move towards green. And, sustainability is something which we are seeing starting globally. Our own government is committed to it. Our Prime Minister has made an announcement. And large companies, we have Mr. Narendran on the stage. Large companies are committed to the cause to drive sustainability as a purpose. You are going to see 50% of capex on PLI go into green capex. Our own estimate is the top 4 polluting sectors are going to take investment of 22 to 25 lakh crore over the next 6 to 7 years. So these are going to be triggers from a capex perspective. Of course, you are going to wait for capacity utilizations to come up and companies to start investing. From a private capex perspective on an infrastructure side, I think India cannot be built by the government. You're rightly mentioning that. We need to have, and I think bond financing, REITs, InvITs, there are instruments which will have to come to help bridge that gap. We have ourselves highlighted that the current financing between bank loan, bond market, and whatever is available, you have a large gap on financing. You will need to find innovative structures. The government will have to, help enable, create that ecosystem where a lot of bond market investors come in, a lot of global investors come in, and I think that is something which will be a trigger for that growth to happen on the private sector capex side. But a lot of things are moving, and I would say we are optimistic from a growth over the next 5 to 7 years.
Okay, you've given me a follow-up question in light of the fact that during this month alone, around 42,000 crore has been pulled out of the markets, but I won't ask you that question. Sanjeev, I'm coming to you and coming back to the topic of the panel, staying ahead of the curve. A lot of companies come and seek your advice for various parts of business without sort of breaking revealing any confidences. Can you tell our audience here, what are the top 3 questions that businesses and CEOs are asking PwC today as they navigate this very uncertain world?
So really 3 topics, I would say. I think the first is that everybody wants to prioritize. because, you can't do 20 things. And as money becomes dearer, you don't want to do 20 things. You want to do fewer things. So it could simply be, it also gets you agility, because we are saying we're talking about a VUCA world, so we need to be agile. So the clear message is that we need to be a lot more, we need to be a lot more clear as to what we want to do, which means prioritize. Look at my portfolio. Maybe there are things that I should actually be divesting, and somebody else should be actually running that asset. So one is prioritization. I think the second thing really is that how do we focus on generating and building greater trust? Amish spoke about some of the areas, but it's not just, the trust just doesn't come because of compliances anymore. We are also talking about what is our social fabric, what is the governance fabric. I mean, what are you doing about climate change? But now it is going beyond. I think the question also is that what are we doing? What is your algorithms? What are you doing about data privacy and so on and so forth? Because, the narrative has changed from just the shareholder to the stakeholder, and we have been talking about it. So I think now the manifestation of that is that people are now talking about that how do I generate more trust? Because trust is now being looked upon as a value creator. It is not being looked upon just as a compliance matrix, but trust is now being looked upon as a value creator. And I think that's the big thing that we have been discussing with our clients, and that's, areas that we talk about. The third one is, and maybe it will sort of go into the point that you were mentioning, how do I marry the short term with the long term? In the short term, there are imminent challenges, and I need to deal with them, right? Some of those, we keep talking about infrastructure needs to be better, and what kind of stuff that I need to do now for the here and now. And there are a lot of things that you do. There's a whole piece on transformation. I think the technology business as a result obviously is doing very, very well. The growth that the Indian technology business scene is humongous. But when one talks about future, and when one talks about what can we do down the line, 3 years, 4 years down the line, because you need to sustain this growth, hopefully, which you'll have once you go over the hump. I think 3 things are coming up very, very consciously in decisions. And we see a lot of corporates actually focusing on those as well. Education, healthcare, and what are you doing for youth in some ways. I think those 3 factors are coming across, whether you want to do it as part of your purpose statement, whether you want to create a business around it. I think these 3 segments are coming out as, perennial discussion topics: education, health, and what are you doing for youth. I think those 3, then of course you go into areas like nutrition and so on and so forth, but broadly those are the 3 topics, Siddharth.
Sanjeev, I'll come back to you about what would the average Indian corporate look like a decade later. So some time for you to think. TV, I'm coming to you on this point. A bunch of FTAs after first 5 years of the NDA government, where it was in some ways an inward-looking focus, Atmanirbharta, Make in India, and who better than you to talk about Make in India? You've been doing that for years. You steal the nation in some ways. These regional pacts, what do they mean for Indian industry, larger players, and perhaps for you as well? Because in earlier bouts of trade pacts, we have seen Indian companies in many sectors had to deal with shocks. In today's days, and these agreements, once they start panning out and they start getting implementing from next year onwards, what kind of impact will these new regional trade agreements have?
Yeah. So I think it's a very important subject, Siddharth, and I think there's a lot of learning that we've had as a country in signing FTAs. Because at a very fundamental level, I think we should not forget the fact that we need to create jobs in India, right? And you will create jobs in India only when there are investments in India. Second point is, India is different from many East Asian economies that we are compared to, because India is also a market. India is not just a source. So how do we leverage the fact that India is a market better than some of those countries did, because they didn't have a domestic market to offer? So I think before we offer unhindered access to the Indian markets, we should try and make sure, like we've done in the auto industry, how do you get people to come and invest in India, make cars in India for the Indian market and for the world? And I think if you want manufacturing to happen in India, you need to do it in a phased manner. Because people can't travel anywhere in the world for jobs, right? There are restrictions on people movement for jobs. So people will look for jobs in their domestic markets. Goods can travel across, capital can move across. And I think in the last 30 years, India has made it very easy for capital to come into India and invest in India. Most industries, you can own the industry 100%, which is more than what most countries offer, right? Even if I look at steel industry, you can't own a steel company 100% in Japan or Korea or China. You can in India. So why don't you encourage investments in India, get the best of competition in India, make for India, build competitive industry in India, for India and for the world. And I think to some extent, while there is some criticism about Atmanirbharta, I think we need to find that balance and not just copy somebody else's model because it was successful for them.
Is China plus one going to happen in reality?
So I think this China plus one conversation started a few years back. I think we missed the bus at that time. Everyone went to Bangladesh, everyone went to Vietnam and other countries. But now there's a China plus one happening again. And this time what we're seeing is there's a lot of interest in India. For two reasons. One is the PLI scheme and everything else is attracting investments into India. India is developing as a big source for electronics, for instance.
But has, other than PLI, the real fundamental on-ground issues, have they changed to allow China plus one?
So the good thing in India, states are competing with each other. You know, there's only that much you can do out of Delhi.
Can there be a China plus one in steel, for example?
Yeah, certainly. In fact, that's...
I mean, there was a South Korean steel company that could never make it here for more than 3 decades.
Well, to be honest, we started at the same time. We built a steel plant. They didn't. In India, you have to persevere. You have to build relationships with the community. And you have to keep at it. It's not an easy place to invest. But it is an attractive place because it's a huge market. And India has all the raw materials in the world. There's no reason why many countries who are exporting steel today should be exporting steel. You should be making it in India and exporting it to the world.
So, TV, if you have everything, like any other company in the world, any other advanced economy, what is that X factor that companies and business people and CEOs like you need to succeed in an Indian environment?
So I think there are two things. One is the cost of doing business, which to a large extent is also getting addressed through simplification of taxes, GST, infrastructure, etc. Second is the ease of doing business. And this ease of doing business, there's some things which can be fixed in Delhi, something which needs to be fixed at the state, some things which need to be fixed at the district level.
Today in balance, where does more fixing need to happen, at the state level or the central level?
I think more at the states. Because the good thing is states are competing with each other. That's good. But not, if you look, there's a huge difference depending on which state you operate in.
I can't ask you to do a ranking of states here impromptu. That's not going to be easy. I'm coming to you, Padmaja, and on the broader issue of money finance, because that is fundamental. That's the oil for any business in India. And for long, and if you do these graded comparisons, for example, with China and the real estate sector, for 3 decades, China's real estate industry and those millions of apartments that still remain empty, while we as outsiders ask questions of that, they actually created employment. And the real estate sector has a massive spillover effect into all other sectors. In India, why is money so excessively costly when you put all of it together for an entrepreneur and for a business person to start up?
Are we talking of real estate sector or startup?
No, broadly beyond real estate, of course, the answer is quite obvious, but we'll leave that.
No, the comparison with China is, yes, I think onerous. We are seeing where China is, how volatile the economy of China has become and how it's leading to that China plus one argument that we were discussing. Coming to India and about the startups, I think there has been a sea change in the environment for startups. The fact that we have about 65,000 startups today and we have 103 unicorns, all minted in the last 1 year. We had IPOs about more than 1,000 in the last 2 years. So with all this, I think the startup economy is really picking up pace. Yes, there has been some moderation in the last 2-3 months, given the situation that is beyond even India's control, I think. But the ecosystem for the startups, whether it is the private equity, venture capital, this has been very, very well established. I've seen it from the banking side. We are seeing it from the capital market side also. Yes, FPI is, today it is sort of in a withdrawal mode, but I think that is a flight to safety, or the uncertainty, the complexity that is evolving around the world is making them a bit, withdrawn. But I think it will come back. The best thing is that this is being replaced by Indian mutual funds, Indian retail investors. So the money, it's not like the economy is collapsing because FPI is withdrawing. It is actually quite well steady now. The thing is that the more the Indian investors invest, there would be much more I think, focus from the regulation side, from the government side, because this would be a less aware sector, I think, the retail investors, so financial awareness is something we need to build. Now the startup economy, I think the other factor that is missing today in startups, I feel, is the funding, the debt funding for startups. This has started in Silicon Valley. There is a whole bank set up in Silicon Valley Bank, which gives loans to startups. And then there are multinational banks that are looking at that part. In India also we tried, we did it in one bank. But the appetite of the startup seems to be towards equity rather than bear that cost of the debt. I think this sort of awareness, financial literacy, not only to the masses, but to the classes also is required probably.
Amish, before I come to you, one quick point, because I think it will flow well with what you just said. So one of the things that we did, the big 4 or 5 cleanup acts that we did in the last 7-8 years, is the Insolvency and Bankruptcy Code. And I posit to you, just for the sake of a debate and an argument, that the Insolvency and Bankruptcy Code, while done with the best of intentions, seems to have run aground of massive judicial interpretation, reinterpretation, promoters, RPs, and the whole process is stuck. And I would say genuinely the recovery is in single digits. Is that a good outcome? When it started, did you expect that we would even get single digit recoveries?
Actually, this bankruptcy code, even in other countries, even in US, it took some time to actually settle and give the benefits to the economy. I think in India it has been an evolution. The only aspect I would personally think is we started off with the really big companies. We started with the really big NPAs. So it went into a lot of legal rigmarole. Maybe starting with the smaller companies and having those low, quick wins would have probably sorted out things. But the situation was like that. There were many NPAs.
Has promoter behavior changed? I ask you this as a banker.
Right, yes. There's no doubt about it. I think human nature, why do we say promoter? If you have a chance, it's in human nature to do something, that is not really bad, or there is no real control over that area. I think that gaps have been fixed so that there's no temptation to do this diversion of funds, or there's much more monitoring, there's much better technology to do all that. And banks, it's reflecting in the bank's balance sheets today. And I don't think that NPA crisis will again come to those levels ever, because banks also have sort of, I think, come together, and there is a lot more confidence.
The public sector banker is savvier and smarter than the private sector banker in some ways these days.
I don't compare, but I think there is really no distinction that way. Neither is better or smarter than the other. It is all the context in which we function.
Your point is very well taken. Amish, I'm coming to you, and let's focus on, again, lessons from what you've been seeing. What should be the priority of a mid-sized company in India as it seeks to navigate and ensure that it has sustainable growth over the next 5-10 years?
So I would say, and I just want to take half a minute to address another point which you had raised earlier.
Please.
I think you had asked about, is India more better prepared today than maybe it was to handle the crisis earlier? I think in our view it is, and many reasons for that. I think we spoke about corporates deleveraging in this last few years. So a lot of the large and mid corporates use the opportunity to actually deleverage their balance sheets. If you look at their profiles, I think they have changed themselves. Much more discipline in terms of their investments and how they look at balance sheets now. If you look at the banking and the NBFC sector, we had some turmoil. NPAs went up over a period of time. NBFCs had their own crisis. But we see that liquidity, provisioning, NPA, I think a lot of it has improved over the last 2 or 3 or 4 years. And they are much better prepared to fund growth, whether it's capex or working capital. So the large and mid-sized corporates, the banking sector, I think the place where we see some bit of challenge is the SME segment, which is where you really see impact. The contact-based services got impacted in a very big way in the last 2 years, but we are seeing that recovery coming back, with the economy, the travel, and all of that happening. We hope this year's GDP will be driven largely with services, and that should augur well for the economy. And fourth, I would say the exports of IT services and the services sector. So these are some of the things which gives us the confidence to say that we are much better prepared to handle a crisis. Of course, our forex reserves, the way they are to handle the current situation, versus what we have seen in the past 20, 30 years, we are much better prepared from a resilience perspective. The policy direction that the government has taken, the steps which we have taken, whether it's monetary or fiscal, all of that gives us that confidence. I just thought I'll answer that.
Yeah, please. You want to take up the point of what needs to be done further.
So from a medium-sized company or the mid-sized company, I think one is business models have undergone a change very fast in the last few years. So adaptability, and I think Sanjeev spoke about it. So adaptability is going to be very important. Are you ready, flexible? Because everything is getting disrupted, whether it's supply chain, whether the way you work, your customers are getting disrupted, your employees are getting disrupted, to the level that your business sustenance itself could be challenged today. How do you, if you just look at people cost on some of the tech, companies, or some of the other, skilled labor, 20, 30, 40% increase in labor cost, attrition at a very different level, customers are not going to pay you. So I think your ability to really adapt and take those actions, much faster actions, that is going to be very important. I think you cannot depend upon longer term plans. I think you'll have to calibrate your plans as you keep moving along. Also, I think ability to look at technologies and new models which will disrupt you. I think earlier we used to say, listen, disruption can happen from near companies. Today, disruption can happen from companies whom you don't think will disrupt you. Are you really prepared to look at that disruption and maybe even collaborate with those companies? I think partnerships and collaborations are going to be very important. You can't do everything yourself. So I think it's important for these companies to look at technology, to look at models, to try and look at collaborations and partnerships. Fintechs is a very good example. When you're looking at the banking sector in India today, the way they have embraced fintechs and tried to leverage digital, something which is for a lot of other industries to learn.
Can I ask you a follow-up on fintechs in the context of the current debate? One of the things that fintech people say, mostly off record, is that while they are pretty abreast of technology, they say that the RBI is not, and policy making is following. The most recent thing is about your prepaid load-ups on that and the disruption that it forces. And on the way here, I was trying to teach myself how should I tokenize my card, because that is a deadline that's coming up on the 1st of July. Is that a fair assessment, or am I being overtly critical?
See, I would say that when you are dealing with money of people, you need to be extra responsible. And I think, technology innovation, there will have to be a balance, right? When you ask technology companies, they would like to test the limits, push the boundaries beyond. And I think when it comes to people's money, you are going to have that responsibility as a regulator, as an organization to think about. And I think that balance will have to be drawn. You will see the pendulum move in a particular direction, then maybe you calibrate that. Over a period of time, I'm sure you'll find the balance of what is right. I think how do you encourage innovation? How do you allow companies to evolve? I think that's where we will have to evolve as a country. Sandbox environments. I think the regulator is trying to take feedback and work through it. I'm sure the pendulum is going to keep moving one way or the other till you find the right balance.
Okay, Sanjeev, I'm going to come to you on that 10 years thing. Padmaja, I'm coming to you because it would be wrong to only give one aspect of the RBI. The question that I really want to ask you here is, considering what is happening to cryptocurrencies across the world, massive amounts of wealth, so-called wiped out, $2 trillion plus, and we ran a story on Business Today where we said, did the RBI and the government of India actually save Indian investors by raising the red flag for almost a year and telling them, don't go too deep into this. This is very volatile. It is very uncertain. Is that a fair way to put that?
Yes, I think it is fair to say that, because what we don't understand or what we don't really fathom the implications of getting into it in a big way would be inviting trouble. And as RBI, again, they have to look at the whole economy. And the bloodbath that is happening in the crypto space today, probably we would not have been able to control if we had, let it play out in India. So I think it's a fair.
Sometimes the heavy hand of Indian regulation does have its good there. We are on the final 5 minutes of this panel, and the last wrap-up comment from you, Sanjeev. 10 years down the line, if I was hoping to build a company, or there are people who are already doing that, what are the key things that they should remember?
I think the first thing is the move, the energy transition that's happening. I think that's huge. I think we have spoken about it a little bit. I do believe that we can play a big role globally. I mean, already, we are actually competing with China in terms of fulfilling the world's energy needs as they transition towards cleaner energy with the focus on hydrogen and so on and so forth. I think that's going to be one big one. I think second one is, the amount of private capital that is currently available, and I was, some of the questions that you were raising with to Padmaja, I think the amount of private capital that is available for Indian businesses, considering the challenge that we have in terms of transforming some of our businesses. Today, transformation is not about just a pure transformation of supply chain or front office or workforce. The supply chain has to be integrated with, let's say, the ESG elements, right? So it is it's wheels within wheels. Now, to drive all of that transformation, etc., people will need capital. And I think we need to be able to leverage private capital much more than we have. I think the point was made. Today, the banks are well capitalized, so they may be able to finance the next capital cycle. But I think the amount, $900 billion of dry powder, which is there globally, I mean, fund after fund is raising $30 billion funds. I think we need to be able to leverage that private capital for our own sake. And I think the third one really is the ability to harness the talent that you have. Again, if you look at it, again, we're talking about, the question that you had on China, for instance. In terms of vocational training that China gives to its people, I think at least 25% of them go through some formal vocational training. In the US, that number is above 50%. In India, that number is in single digits. And I think that's something that if those three, to my mind, would be key for the next 10 years.
Absolutely. And there's so much more that could have been discussed, but we're completely out of time. TV Narendran, Padmaja Chunduru, Amish Mehta, and Sanjeev Krishan, as always, thank you very much for your time. With that, it's a wrap on this session. Abha, back to you.
If you like the video, do like, comment, share, and subscribe.